Good morning, everyone. This is Srikanth Rajan, and welcome back to the Stock Market Podcast from MPIinvest.com. Coming to the market on Friday, absolute pleasure to all those investors who are invested, isn't it? Yes, it was the best day in 2023, I would say, because on a single day, the market has rallied almost 300 points up. Well, that was kind of expected because 10 days of continuous days of selling in the Indian market. There are so many people who would be short on the market, and suddenly when things turned positive, everybody have to do their short covering, and we could see the market rallying upwards without any stop. Well, it has rallied really big. Majorly, we could see Adani Enterprises and Adani Ports up by more than 10% each. SBI was, the one that played, the very important role on Friday. It was up by more than 5%. Multiple reasons. One, of course, Adani Group, is looking settled as of now. And second thing is they are removing or reducing the stake in Yes Bank. So both these put together, it was, of course, absolutely good news for SBI, and SBI was seen rallying upwards. So overall, it was a very good time, I would say. But then, if you look at what happened after Indian markets closed, it is interesting to note the US markets also closed in the green. In fact, the US markets have been a little jittery of late, thanks to the inflation concern. But then there was this one of the FOMC, the Federal Monetary Policy member, who actually came out and said that he is in favor of only 25 basis point hike and not a 50 basis point hike. Though this is not a decision, this is just a comment that came in, and that kind of gave the positivity to the market. But however, this week has to be watched. You know why? There are two important things that happened over the weekend. First one is that Amazon, which was planning, expansion, capital expansion, has kind of stalled it for now, which is not a great news. Second thing, Facebook has, Meta, the parent company, has reduced the prices of their virtual reality headsets. So that was kind of again negative. So both of these are kind of putting the US markets in a slightly negative slot, and we could see the US futures, which were higher on Friday's close, to be lower today. So naturally, when the US futures are lower, we could see SGX Nifty also kind of going slightly lower. But however, it is still positive from where it closed on, from where Indian market closed on Friday. So SGX Nifty is still indicating a small gap up. We could expect a gap up, close to around 17,650. But then it's not a big gap up, about 40, 50 points. But then even if that happens, of late, of course, SGX Nifty has not been a real trend to the Indian stock market. But even if there's a gap up, will it sustain is the big question. Tomorrow is a holiday in India. It's a local holiday, so it's only for India due to Holi, whereas the global markets are open. So there are chances that traders would like to book their profits before the day close. So there are chances that the market could actually end lower, but will the gap up sustain is a big question. So the gap up might see some profit booking kicking in. And after that, it is the last 1 hour that needs to be seen how the market is actually reacting. If the market is actually falling down, that could be a great opportunity to add few good stocks. In fact, I am looking at adding Axis Bank. I do have it in my portfolio already, but I will be adding some more. Recently after the takeover of Citibank in India, so Axis Bank is actually getting access to a lot of HNI clients of Citibank. So that could actually trigger some good profitability for Axis Bank. This is my view. Don't take it as a recommendation. I'm not a SEBI registered analyst, but then this is just something I share for educational purpose. So, well, that's what I am doing. So I just thought I'll share this with you. So looking forward to add Axis Bank today. And of course, I'm also adding few PSU banks, and also looking at adding some NBFCs as days go by. So there has been a good correction. So definitely this is an opportunity for us to add on to good stocks. So well, that's what I would be planning to do this week. So apart from that, tomorrow there is a testimony of Jerome Powell, the Federal Reserve Chairman, tomorrow, and that is going to keep some market volatility. So what is going to happen is he is going to talk about the future plan on the monetary policy and also what could be the rate hike. So that could give some hint to the market, and due to that, the market would be kind of in a jittery mode, and this would not be good for a market to stay higher. So overall, I'm kind of expecting a slightly bearish to flat day today. We should also see the market little consolidating after whatever happened on Friday. So that's kind of what I expect for the day. And like I've told earlier, I'm expecting this week to close between 17,300 to 17,700. In fact, 17,700 to 17,800 is a very important resistance. So that needs to be watched, which I'm not expecting it to be broken this week. However, if, like I've always said, we can never predict the market, we just anticipate. So this is what I anticipate. The market has to trade between 17,300 and 17,700 to 800. So that's the range that we're expecting this week. Let's see how the market goes. And based on that, we would be taking trades. In fact, we are already sitting with a few trades for this week. Looking forward to some good recovery there for the day. So with that, this is Srikanth Rajan signing off. But before we leave, do remember to press the like button if you love the content that we share. And do share the podcast with your friends and relatives to help them learn and invest together with us. If you're not a part of our community yet, do message WhatsApp on this number given in the scroll, and our team will help you join the community. You can also join our WhatsApp broadcast group by going to the link given in the description of this video. That's it for now. This is Srikanth Rajan signing off. Goodbye and have a great day and a great week ahead.